Are fixed deposits still worth it with other high return products in the market right now? Now, as of the recording date, this is currently what the Singapore fixed deposit rates are, and we can see from the top three, the first one being Citibank, where there is a time deposit promotion for Citigold clients with a minimum placement of $250,000. You get 3.7% per annum, and that is a 3 months fixed deposit. But you see, with this high placement, it is only offered to exclusive customers who have that high capital. And if you do not have a Citigold account, you could apply with my referral code right here. Then what about the next two highest FD rates? It will be coming from RHB, where it is 3.68% per annum for the Premier Online fixed deposits and 3.60% per annum for the Personal Online fixed deposit for a fixed tenor between 6 to 12 months. So if you're unfamiliar with fixed deposits, here is some of their nature. They are relatively non-liquid, which means that you have to hold till the end of the term in order for you to earn your interest. So if you withdraw somewhere halfway, you will not receive any kind of accrued interest. And the good thing about fixed deposits is that they are SDIC insured up to the first $75,000, so it is a relatively safe and capital guaranteed product. And if you want to join 11,000 like-minded people on achieving the financial independence journey, join us at Honey Money SG Telegram with over 11,000 members. But in today's video, I do want to offer some other options where you can look at other than fixed deposits, because you may feel that this 3.6 to 3.7% per annum return on a fixed deposit is kind of low. And starting with the first alternative product, we have money market funds. Now, for money market funds, you can buy it from various different platforms. Some of them are like digital advisors, and some of them are from trading platforms like Moomoo or Webull. And the most popular money market fund must have been the Fullerton SGD Cash Fund, which is offering around 3.7 to 3.8% per annum. And this product is highly liquid and it will give daily returns according to the mark-to-market value. But let me stress this again, it is not a cash deposit account. It is more like a cash management strategy to give you returns on your idle cash funds. And it is definitely not capital guaranteed because it is considered like an investment. If we look at the existing promotions offered by trading platforms from Moomoo, even the existing users can get 5.8% per annum guaranteed for 60 days. When you subscribe to the Moomoo existing users promotion and deposit at least 50,000 Singapore dollars to qualify for the 5.8% per annum guaranteed return for 60 days. Now, speaking for myself, I do have quite an amount in Moneybull by Webull as well. And the main reason was because I was participating in the previous Webull promotion where they are giving up to 3,000 US dollars of cash voucher. But that offer has already ended. So right now, I think the promotion is up to 2,000 US dollars. And Webull is the sponsor of today. I cannot believe Webull just upsized their welcome rewards. They are so simple to get. And if you want a good reason to use Webull, here is one of their features, which is Moneybull by Webull. For those who are new to this, Moneybull is a wealth management tool designed for margin accounts to earn a yield on idle cash, whereby for the US dollars, it is offering around 5.3% per annum of return. But if you're not a fan of US dollars or foreign exchange risk and all of that, then you may consider to subscribe to the Moneybull SGD. That is yielding around 3.7% per annum. After activating Moneybull and depositing, how do I subscribe to the Moneybull or money market fund? I think what Webull makes life easy is that it will be auto subscribed. So do not worry. After you have funded money into the Webull account, you don't have to manually click and subscribe to Moneybull to get the daily returns, because all of that is handled by Webull automatically. One thing I like about Moneybull is that when you subscribe to Moneybull, 99% of the market value of your Moneybull position will be added to your buying power for trading purpose. And the funds from your Moneybull position will be auto-redeemed when you do not have sufficient cash to settle your trades. If you are new to Webull, you can get 10 free shares worth up to a total of 5,000 US dollars. When you fund any amount, even $1 will do, and you will hold that deposit for at least 30 days. So don't miss this offer. Sign up with my exclusive link down below or scan this QR code right here to get your Webull account today. So let me say again that even though money market funds seems to be really nice, giving you daily returns mark to market, but their underlying risk is that it is not capital guaranteed and the risk appetite may be different compared to a cash deposit account, specifically fixed deposits which are insured by the SDIC. But if you want something more capital guaranteed, similar to fixed deposits, then come the next option, which is Syfe Cash Plus Guaranteed. And this is a relatively new product just launched this year by Syfe. It's giving you around 3.8% per annum guaranteed returns for a 3 months tenor. Syfe Cash Plus Guaranteed aims to deliver guaranteed returns in line with or above prevailing prevailing fixed deposit rates. The portfolio invests in fixed deposits from MAS regulated partner banks in Singapore. So what I can infer from this product is that Syfe tries to gather the best fixed deposit rates and package it to one investment management account so that it will give you the best return based on their huge size. And what Syfe says is that Cash Plus Guaranteed is a managed portfolio. Syfe may choose fixed deposits from different banking partners to achieve its investment objectives. They regularly access the rates from these providers along with the market rates to ensure that Cash Plus Guaranteed rate remains competitive. So if I want to simplify it, I would say that it is almost like an ETF of fixed deposits. Of course, it is not traded. It is just like multiple fixed deposits packaged into one managed account. And since it is predominantly like a fixed deposit, you will only receive your returns after a period of 3 months, which also means during these 3 months, your funds are not liquid. You cannot withdraw them because it is already placed in the Syfe Cash Plus Guaranteed portfolio. So the good thing about Syfe Cash Plus Guaranteed is that the returns are guaranteed so that 3.8% per annum will apply for that 3 months. But it is still subjected to the underlying bank risk. So if you want to sign up for Syfe Cash Plus Guaranteed, you may use my referral code HoneyMoney to input as your referral. The other alternative to fixed deposits is definitely TBUS. And based on the date of recording, the previous TBU was giving a yield of 3.75% per annum. And the good thing about TBU is that you receive the discount upfront after the subscription. So you receive it as soon as your holding period starts. But the thing is that it is not really liquid. You have to hold it for a minimum 6 months period depending on which TBU you applied for, the 1 year or the 6 months one. Also the fact that TBU is backed by the government, so it's really suitable for low risk investors who just want a steady return and not worry about capital guaranteed or not. And like I said, during this 6 months period, you cannot really go and sell away your TBUs and get back your cash, so it's not really liquid unless you want to sell below par value, which kind of don't make sense at all. But if you really want to invest your SRS, then the next product will be more to your liking, and that is the Singapore Savings Bond. Now, if you're applying for the current Singapore Savings Bond, it is giving 3.4% per annum in the December issue, and that's averaged over a period of 10 years. So you will receive your bond coupon payment every 6 months for Singapore Savings Bond. SSB is also a low-risk asset backed by government, so suitable for low-risk appetite investors as well. The good thing with SSB is that you can subscribe with either your cash or your SRS. So for those of you who want to contribute to your SRS to lower your taxable income, I think SSB is a good option for you to use it. And the other beauty of SSB is that it is highly liquid. As long as you sell within the calendar month before the deadline, you can expect to receive your funds by the second working day on the following calendar month. So it's kind of liquid, I would say, within 30 days. In summary, if I were to compare fixed deposit rates of between 3.6% to 3.7%, to all these products, I'll feel that fixed deposit kind of loses out to many of these products. In terms of returns, currently it doesn't beat T-bills, which is also backed by government some more. In terms of longevity, it cannot beat SSB giving you 10 years return of 3.4% per annum. And in terms of liquidity, it doesn't beat the money market funds, allowing you to withdraw anytime. And even for similar nature Syfe Cash Plus Guaranteed, which is a managed portfolio of fixed deposits, I think that Syfe Cash Plus Guarantee of 3.8% per annum seems far better than the normal fixed deposits. But is there a case that one should really still look into FD? I think there still is 3 reasons. Number 1, for the SDIC insurance of up to first 75,000. And in fact, starting from next year in April, I believe, the SDIC insurance will be upgraded to first $100,000. So that's good news for all of us bank account holders, more assurance. And then for fixed deposits, some of them do have a longer lock-in period, like up to 24 months, if you prefer that longevity factor. And lastly, the fixed deposits definitely count as assets under management if you want to use it to qualify for higher tier, premier, priority banking relationship, for example with Citigold. And you realize that I excluded a very important product known as the high interest savings account. And the reason why I excluded it is because you have to jump through multiple hoops and fulfill the terms and conditions. And all of you must have been familiar with UOB1 or OCBC 360 account by now. But do you realize that the next best alternative may be something you never even heard of? And I'll go through that account right here in this video.